the number stop the Fed tapering at the end of the month?
No, we don't think it does. We think that the labour data on Friday raised more questions than they answered, and clearly the payrolls report was weak, but we don't know how much of a distortion was there from the unseasonably poor winter weather in the US. And the numbers also stand at odds with more upbeat data from the ADP report and also the employment sub-indices of the ISM surveys in the US. So in the absence of any sort of clear signal, which these data do not give us, we think that the Fed remains on its cautious tapering path and continues to taper at its next meeting on January the 29th by $10 billion.
All right, 10-year yield down to 285. What's the trade? What's the European trade? What's the Eurozone trade on the back of this?
Well, what was interesting about the numbers on Friday in the US was that stocks initially weakened and then subsequently reversed that, and actually the S&P ended very slightly in positive territory on Friday. We're slightly positive also overnight in Asian equity markets, and it appears that stocks are taking heart from these data in that their weakness points at the very least to the fact that the risk of the Fed tapering too quickly or accelerating its tapering is now much reduced, which is positive from a credit risk perspective. So there's this sort of heads I win, tails you lose quality here, in that if we had seen a strong payrolls report on Friday, the market would have seen that as credit positive from a fundamental perspective. Actually, we saw a weak number, but that means more central bank stimulus, which is credit positive from a liquidity perspective. So either way, we expect peripheral spreads to narrow. That's the theme we have been playing. We took profit on our long 10-year Spain versus France position on January the 3rd, and we re-entered a positive peripheral play on Friday. We are long 10-year Portugal versus France.
All right. You talk about shorting France. We got, and it's not a very busy week this week. Hollande is giving his address tomorrow. And I guess that will that further support your short France bet?
Well, the market's looking at this address tomorrow for some signs that Hollande is going to take a more business-friendly approach, a more proactive approach in terms of reforms. What has been particularly conspicuous as regards France is that, in contrast to the periphery, it has made very little progress on the reform front, and part of that is due to the fact that it didn't come under the same degree of pressure as the periphery did during the Eurozone crisis. It appears now that the Eurozone periphery, certainly Spain, is reaping the rewards from the earlier reforms that it has put in place, whereas France, which is looking to be something like the sick man of Europe, is not. So that supports, again, positive peripheral plays versus France. Tomorrow we'll be looking to see if there's any detail behind Hollande's business-friendly rhetoric of late. However, the market may well be disappointed, and certainly there are personal issues in France as regards Mr. Hollande and the scandal that has been brewing there, which may overshadow tomorrow's speech.